on, gentlemen? Yeah, thanks, 3Speak, for inviting me up, man. Yeah, there's a big split. So this part of this crunch with USDC actually starts one with I mean, obviously the idea of fiat-backed stablecoins being a problem, but it actually goes to even Silvergate, which was closed, so they don't have 24-hour trading options anymore. So they can't handle the liquidity after hours. Like, this was a small issue that happened with Binance a few months back, where they had a gap where they were waiting on issuance because they were trying to wait for their banking partner. So there's a couple of things that is called the problem with USDC. That's part of it, is that they don't have access to that liquidity, and it happened to happen late on a Friday. So now there's this gap between when they're going to be able to access other liquidity. Even though they do have some exposure to the Silicon Valley Bank, it's likely that what they actually lost, which is around 3 billion, which I think is like 8% of their holdings, they're going to end up getting the majority of that back in some regard. But that's not actually what affects the peg. What affects the peg, regardless of if they're actually fractionally reserved or not, is only because the redemption is down. So the price of USDC is just whatever the liquidity pools say it is, and that redemption causes that arbitrage that keeps it correct. So the price of USDC doesn't actually represent their fractional reserve. And even though they've lost funds, when you look at their access to like a lot of liquidity from like federal home loans, BlackRock, and the amount of USDC that isn't actually, it's redeemable but not available to be redeemed because of the different instruments it's in DeFi or the people that hold it, including Circle themselves. It's pretty reasonable to assume, again, it is a big assumption, but I don't think there's really a risk that on Monday we won't see that peg regained. And even if they are fractionated by a few percent, it would take a massive run to actually still cause that peg to break. It would likely take more USDC trying to redeem than is actually available to be redeemed. The other issue was with DAI. So DAI has a hard code in there where it treats it in the rest of the process for the MakerDAO as a dollar. So that's the reason that peg is moving in lock and step, is because it ends up being an ARB event, whereas USDC's peg breaks, people just ARB through the MakerDAO and mint DAI, and that's what keeps its peg tied to USDC.
Oh, that really makes a lot of sense. And I had read about Silvergate's behind the scenes. Silvergate runs this bank level clearing system on its own private blockchain that everybody has been using now, and it's just about the only 24/7 instant settlement bank to bank instrument that's actually up and running all over the place. Is that right? Or was up and running?
Correct.
And
Yep.
taking down Silvergate stopped that network cold, and that's causing enormous problems.
Correct. It's the combination of the two. So that was called the SEN network, and that's what allowed these other crypto players to move these funds around. And since it was Binance lost the access to it, they dropped them, which is what caused their problem previously. And then this current one now is because there's no availability of it because it's down. So most of those funds that were in Silvergate ended up moving to Signature. I can't remember the name of the other bank, but they do not have a similar network that allows these guys to trade the gap. So what we've ended up with now is a scare event that's essentially caused where like people would, like traditionally with Forex or standard fiat currencies, would do gap trading over the break, trying to trade from Friday close to Monday open. We're essentially having a crypto event like that's also sparked with fear.
Gotcha. That makes a heck of a lot more sense. Because I looked at the numbers as well, and the money seems to be there for USDC, and you're right, taking 3 billion out of their reserves, because it is still a fractional system. It can't cope with 100% redemption. But you have to then ask, if you're going to redeem your USDC, where are you going to put it? Where are you going to put it? And it's the same as, everybody rushing to pull their money out of the Silicon Valley Bank. Not only did they have to pull their money out, they had to find somewhere to put it in a hurry. So, if you're going to redeem all your USDC, what are you going to buy with it? Are you going to buy more Tether? And you're right, behind the scenes, everything, the liquidity has just been crushed in a number of ways.
Right. So there's kind of that separating of events between there's Circle and their holdings, which the majority of their holdings are actually custodianed by BlackRock and a private fund, and then you also have the Silicon Valley issue. But specifically for like Circle, this same run and peg break could happen whether or not there was any issue at all. So Circle could be 120% backed. But if they still had this instance where they were unable to process redemptions properly over, say, a weekend again, even if they were 120% back, you could still break the peg because the USDC is not worth $1. It's worth whatever liquidity pools say it's worth. So it's the redemption that keeps that peg at the dollar. So if you lose that fact, again, USDC could be perfectly backed, but it's still worth whatever the liquidity pool says they are.
Interesting. Dan, what does this mean for HBD? Should we just relate? I mean, HBD is a tiny, tiny little thing compared to these giants, which move billions around. But we've done something. We seem to have done something right with HBD.
I just like just give some context here because I know probably Walrus isn't familiar with HBD. HBD is and maybe other people in the room as well. HBD is an algo-backed stablecoin. It's 7 years old. It's been stable pretty much the whole time. There's been ups and downs, but in the last, I think, 18 months, it's been pretty spot on stable. And it redeems Hive for 1-to-1 US dollars worth of Hive on the backing of the Hive backed dollar. So, and basically, Hive is backed by the resources of the community. There's a competition for resources on Hive. The more Hive you accumulate, the more access to the chain you have, especially if you're an app such as we are and the types of apps that Brian is running. We need to have a lot of access to the chain, so we need to have a lot of Hive, which means we're like holders of last resort. We won't sell our Hive at any price because our apps will just stop running if we sell our Hive. Then the community's built this HBD stablecoin on top of this, and it has controls in place to make sure that HBD never becomes anywhere near the size of the main chain's economy. So that it's a very, very small size market cap as compared to the main chain that it's backed by, which is then itself backed by interactions and competition for resources in the community. And with legitimate apps and legitimate communities on top of that, which there is actually an underlying value to the ecosystem that's locked into the ecosystem itself. So, I mean, the context I want to bring here is obviously people are very skeptical about algo stablecoins based on what happened with UST, but at the same time, we think here there's been enough controls put in place to make this a legitimate stablecoin. And as a result, it's small because it has to be small for now to grow organically over time. These things aren't quick get rich quick schemes; they're slow growth, not get rich slow schemes that basically allow you to grow a stablecoin on the back of a legitimate economy. But that economy, it has to be in proportion. It has to be small in proportion to the size of that main economy. So that's the context around which I want to have this discussion.
Yeah, I'd look at it two ways. You have things that are liquidity instruments. These are going to be things like USDC, highly controlled. VCs, big wallets are going to want that sort of centralization, that sort of protection. And that comes with these type of events. It kind of sucks to have to rely on something so centralized, and then maybe you had to cash out this weekend, shitty timing, and you only got 90% of your money out. If you have a large sum of money, that can be pretty devastating to a lot of people. These stable coins are meant to be pegged for a reason, so that always sucks. But I wouldn't look at an algo stable coin, at least not HBD, as a liquidity instrument. I look at it as a community merchant barter instrument. Fast, feeless, you can hold it, get 20% yield. Even if it's 5% yield, it's still amazing. It acts as a true banking account for people who don't have banks. Every phone is now truly a way to store some stable value if you don't want to deal with the volatility, if you believe the dollar is stable. So as that grows, you can build something what Task has always been talking about, sort of like Hive bonds, and build these layer 2 economies on top of that. But first, for HBD to strive, it doesn't have that centralization. It doesn't have the pre-mine. You can't have an algo stablecoin with the pre-mine. because no one really knows what happens. There's like, oh, there's inside wallets dumping this, and you can't do that with Hive. There's no inside wallets that can mint a bunch of HBD and dump it on the market. There's no pre-mine where people have that sort of power or control. So that's a good thing for censorship resistance. It's a bad thing for liquidity. Liquidity begets centralization. People love centralization. The more money you have. That's why most of the billionaires in this space are pretty pro KYC. They're pretty pro regulation. There's a reason for that, because they understand how the game really works when you get to that level. Communities aren't really about that, right? They're sort of like, hey, we don't want our bank account shut down. We don't want to just have a black swan event where we can't get our funds. Brian said something interesting. He said, right now I trust HBD over pretty much anything if I wanted to store some value. And I tend to agree. It's pretty difficult, because when you look at an algo stablecoin like HBD, it's backed by a community, the bandwidth token of Hive. And I have faith that community is not going to just, get up and walk away. They have no incentive they don't have the power to just black swan, to take advantage, to neglect, to do something for their own self-interest, to do a shitty job, right? We're all working together. There's a reputation based. Only the elite, only the people who are really putting in a lot of work are rising to the top. There is no, as Brian was saying, woke. It's not about that. It's all about performance, because you live in the jungle. And when you have to survive, when you have to scale, when you have to make sure that all the costs are covered, you make sure you do it. You don't slack off. You don't, you're not at a level where you can be lazy, where you can be bored, where you can be quote unquote woke. You don't have that privilege.
Well,
that's
you're
sort
not
of
judged on those criteria. That's the point. I don't know the
Exactly.
cut. I mean, just as Dan said, we interact with and deal with large sums with people who we don't even know who they are. We have no idea what color they are. We sometimes don't know which countries they live in or which countries they came from. We don't care. It's about performance. It's about doing whatever they said they're going to do. It's about those kinds of commitments. And I kind of have to look through the chain of events that would have to happen to bring HBD down. So I run my own node, so I can unlock and I can put into savings my own HBD using a computer that I bought and paid for. Okay, so no one can stop that. Now, for the whole of Hive to go away, it means Splinterlands has to decide to move to a different chain or run their own chain or just do something. So that's a big business. That's a multi-million-dollar a year business. They have to make a big decision. Then all of the social features, all of the blogging, all of the video posting on 3Speak, all of that has to suddenly be decided by all of those different entities simultaneously. They don't want to do that anymore. The Podping service that I run and that is actually growing and becoming really essential to podcasting, we have to decide, okay, no, we're not going to do it this way anymore. And I start looking around, and you need 20 or 30 or 40 different significant events all to happen simultaneously. And then you have to think, if we take out the top 20 witnesses, the next 20 all want those top spots. So I keep trying to do the game theory of how we shut down Hive and how we shut down HBD. And I settle back onto the view that it is safer than the Silicon Valley Bank.
Yeah, you certainly see it coming. It wouldn't just wake up overnight. It would be a fundamental. You'd have to see the biggest apps leave. You'd have to see the infrastructure providers leave and become more and more centralized to just a few. You'd have to see the top most respected witnesses start to leave and anonymous validators start to take over the chain who you've never heard of. These are signs, these are giant red flags, as you would call them, that the chain is becoming a ghost town. And it's obviously not something that's going to happen overnight. So yeah, I tend to agree. It's just an alternative, right? There's people who with large sums of money are going to prefer decentralization and the risk that come with it, and the regulation eggshells they're going to have to walk on. And then there's people who are going to prefer at least the diversity of a community run, something that's censorship resistant, something that is backed by people worldwide running nodes worldwide in a permissionless way, where the network, the protocol is permissionless. There's not a way to corner it in a very easy way. And if you were to corner it, it would shake the ground like a worldwide earthquake, and everyone on the protocol would be alerted. And then it would go into a defense mode and attack mode, because nothing is perfect. Nothing is 100% immutable at all times. It's immutable in the moment, but it can be attacked and it can be stressed to the point. And people on Hive understand not only black swans can happen, alien swans can happen. Things that you couldn't even imagine, things you could not theorize, things you could not even dream of can happen that you can never possibly be prepared for. And you have to humble yourself every day and understand that that could happen at any moment. And realize, okay, well, what happens in that situation?
What are you talking about?
You
what was your alien swan event there? What's an example of that?
Oh, of course, where the Justin Sun Tron, you can call it, CCP or CPP, whatever they're called, takeover, where they colluded with the biggest exchanges in the world to power up user funds. My funds, millions of Steam on Binance, were frozen. I trusted Binance with my funds like a dummy. They froze my funds. And then they allowed Justin Sun to use my funds to attack my other funds on the Steam chain, along with a lot of other my friends' funds. That's the sort of alien swan event that you couldn't predict. It's like, wow, this big billion-dollar business is going to do something illegal to help somebody do something even more illegal. And then not only that, they accepted the hard fork that stole the rest of the funds. So there's no loyalty, there's no pillows, there's no cushy. Like, this is a dog eat dog world. You think laws exist, but they really don't. They exist for the masses, but for a certain few, they get away with anything. So you have to be in a situation where that can't happen.
Can the exchanges?
And when you look around
on Hive and HBD, can they achieve
that? I would say theoretically no, because they'd have a month power up delay. So it'd be like a bullet coming, but we'd see it from a mile away. So it'd be very slow motion. We could easily just reject it. The only, like, I've theorized this probably a lot longer than I should have. The only way to do it would be, thousands of anonymous accounts very, very, very slowly over the years powering up Hive in a way, maybe even AI, maybe even ways to make them interact and build some kind of reputation. It would be a slow salt in the gears attack. That is the only way you could attack Hive. You couldn't do it head on. We'd see it from miles away and we would freeze it. We'd be like, oh, nope, using user funds to take over governance. We're not going to allow that.
Yeah, because I do think that you'd have to earn the Hive as much as you could buy it, or more. And
you'd have to be reputable. The only way to take down Hive is to earn crazy amount of reputation, have be slowly powering up this over thousands of users who are different, so it wouldn't seem weird. And even then, it'd be kind of we'd all be a little bit suspect. But yeah, if you wanted to attack Hive, that would be the way to do it. And why would I say this? Why would I tell people the way I think you could attack Hive best? Is because I want you to do it, because maybe we learned something. If we can't survive it, then we shouldn't be here. I've always said that. There's no being nice. Either we can or we can't. So, I don't know if Nathan, if you have any comments on what we've been saying before we move topic, or anyone else for that matter.
Oh yeah, I would just say, the whole deal with the U.S. dollar coin goes back to the custodial issue of trusting someone else with your funds. And what I really love about HBD is, and what you mentioned is it's a community, right? I mean, these banks have proven over and over that they're not trustworthy, along with the centralized exchanges. It doesn't really matter who it is. I mean, everybody. There was so few people that blew a whistle about FTX before its collapse. It was kind of looked at like the oracle of all exchanges by a lot of the community, until it came out that they're fraudulent fraudulently investing their users' funds, right? And so, without being able to verify that these institutions are actually doing what they're saying that they're doing with our funds, it's come to a point where we can no longer trust them, right? And so, what better option do we have? I mean, the really only other option that we have is some kind of community project like Hive and HBD, where it's backed by a community and not backed by banks or institutions that may not have our best interest in mind.
And could I just add as well, Nathan? It's also, to me, it needs to be backed by a community which allows itself to assign itself a hierarchy via voting from the community. So it's like these are the people who are going to put the most trust in. We're going to elect them in with coin voting, and if they fuck up, if they become corrupt, if they become a registered entity that has to be regulated, then they're going to get voted out of the witness pool. Right? So it's a community trust, but it's also the community able to sort itself into most valued members, I think.
Yeah, by far the best stablecoin in my opinion is LUSD from Liquidity, which uses limited governance, backed by ETH, single asset pool, very capital efficient. The problem we get into with all of these things is you get into you have problems of an economy at scale and trying to actually make these things liquid.
Yeah.
So that's part of the reason for the idea of being fiat backed is that there's essentially $1, one USDC. Whereas anything that's going to be over collateralized or algorithmic, you get into having issues of how you're backing it and being able to produce it at a scale necessary for the liquidity of like an entire system. But that's actually, there's two ways. One, you could be more capitally efficient on whatever the process is to actually get liquidity. The other is to be more efficient on the liquidity providing. So things like Uniswap v3, Maverick, as we become better and more just sophisticated in the way that we're providing liquidity in cryptocurrencies, both in actual execution in pools, DEX aggregators, cross chains. All these things will also reduce the need for more liquidity and make sure that stuff is efficient on that side. So in crypto, I think we're actually battling this problem from both ends, but I think far and away using decentralized collateral-backed stablecoins, especially if the idea is that you're using them personally. So some of these issues about extremely large entities or liquidity pools, again, you can butt up against some economic issues, but for individuals who are just trying to protect value or spend value in a denominatable way that's measurable, then DeFi like LUSD is by far my pick.
How much liquidity has that got around itself? Because this is the first, like, last week or so is the first I've heard of LUSD, but I'm not always on the pool side, mate. How's that doing? Is it growing? Is there a lot of liquidity being built behind it? Do you see it becoming a standard for decentralized stablecoins on the DeFi side?
That is the hope, right? So it's over 200 million in liquidity now. Part of that is also because it's backed by ETH, as the collateral, that gets more attractive to use the lower ETH goes, because then you have asymmetrical risk as far as it going up and being able to take positions in it. A big part of why we use USDC earlier, that was brought up, like some of these levels of insurance and trust players. Mostly, it's just laziness. We just don't understand the risk profiles. The same thing with FTX. So there's reasons to take centralized counterparty risk if you understand the actual risk profile and the upside is worth it. So if using USDC, every dollar I put in gave me $100, like, okay, well then maybe I'll take an admin key risk. But if I'm getting nothing but an equal dollar value and all I do is add layers of abstraction and risk, what was the point? Especially if I'm holding it as an individual and all I'm trying to do is protect principal, then all I've done is add risk without any upside gain, where you can take something like LUSD and these things that are on chain and efficient enough to be able to be held individually. So for the most part, most people use USDC, USDT simply because that's what everyone else does. Most of the big people that were in FTX that got wrecked did it simply because that's what everyone else does. And I'll never forget, I actually have it saved on one of my phones. There was a hedge fund manager who was rolling around $40 million worth of customer funds. And he was balking and blaming FTX for not maintaining and taking care of funds. And I could not imagine that he was able to say that without irony. He was the fund manager that risk profile to look through was his. He is the one who lost his customer funds. He is the one who was paid to manage and assess that risk profile. Yes, FTX, what he did was obviously to blame, but that manager is at fault. And so are most of the people who hold USDC in a lot of these places and haven't actually looked at the risk profile and then want to complain about what happened. So I obviously have a lot of sympathy for people who lose money, people who have made irrational decisions along the way. But for the large players who are just holding these things and complaining, like, that's what you get. You held millions of dollars in a centralized entity and you did not look at the risk profile. So you get what you get.
Like Dan said, this is one of the things I like about the whole DeFi world. You know, there's lots of bad things to it, lots of good things to it. One of the things I think it's a bit of an evolution in thinking. Like Dan said, we're all in the jungle here. You know, you are ultimately responsible for your own keys. When it's your keys, your coins, and your keys, your social media account, then it's up to you. You know, it all falls back on you. There's a certain amount of self-responsibility that you need to take, and the realization of that happening is very, very slow and very long and drawn out. A lot of people haven't realized that. Even big fund actually don't know. Yeah, there's no helping them.
Matt, you sound like you're talking through a
I've got a little bit talk. You guys carry on.
Yeah. Well, yeah. I like Matt said, I'm similar to me. At first, I think I heard LUSD recently. He gave me sort of a rundown on it, but I'll just speak on from my perspective of HBD. As I was saying, I think there's two sort of types of stable coins. There's one that's going to be more centralized. It's going to have more liquidity, more VC backing, more for DeFi and moving large sums. And then you're going to have sort of the convenience factor of an HBD, fast, feeless, can earn some interest, don't have to worry about counterparty risk. And I see it being more of a merchant adoption tool, especially since the fast and feeless nature. I think no matter what, if you're going to have any sort of censorship resistance with a quote unquote stable coin, it needs to be backed by something virtual, whether, you know, some kind of crypto. It can't be backed by actual fiat dollars, or it can't be backed by anything that touches the physical world, because then governments can come and take it from you. So, you know, something like a smartly done algo stable coin that has a cutoff to where, you know, that was UST's problem. There's a bunch of problems with UST. The pre-mine, the fact that they didn't have a cutoff, meaning the UST supply can get actually larger, the market cap, than that of Luna, which is supposed to be backing it. That's you know, to me, when you see that, it just looked like a Trojan horse, like it was done intentionally to ruin the crypto network, or ruin the reputation of crypto, because that's just like, you know, you can't just have that there. It's like building a boat with a hole in it and then just not seeing the hole. So obviously you need some kind of cutoff there. Then it becomes very difficult, because now it's backed by, yeah, Hive can be volatile, but as long as there's some sort of censorship resistance there and use case, you know, Hive, you can store text, offers bandwidth, can do a lot of cool things. You know, apps needed for the resource, like digital real estate. As long as there's some demand there, you can be certain that you're going to be able to get at least $1 back from your HBD, $1 worth of Hive, regardless of Hive's volatility. So, you know, I think that's sort of just an interesting way to not have any centralized points of failure, have any kind of doors that could be knocked on. So any kind of stable coin in the crypto world, you know, has to be built in that sort of way, whether it's algo or not. As long as it's not backed by anything physical, fiat dollars in a bank account somewhere, then you can have some form of censorship resistance. Whether that censorship resistance is quicksand, i.e. you have it now, but, you know, you don't have it in a long-lasting foundation, or if it's, you know, something really sound. I can speak from Hive. I believe the censorship resistance of HBD is really sound. I think it'll be here in 5-10 years. That's something that's built to be sustained. So I think that it's interesting to build communities around that. The more merchants that, you know, the thing you see about HBD is you don't see it adopted in places like the United States that highly. Yet you see it in Venezuela. You see it in Ghana. You see it in all these communities that don't have the infrastructure to build banks, but they see the use case. It's adoption by necessity. You know, Hive and HBD is viral in Venezuela. If you go to Venezuela, you would be like, wow, it's one of the biggest cryptos everyone's talking about. A lot of merchants accept it. A lot of events are hosted, and people are, you know, pretty much everywhere there knows about it. That's how you know it has an actual use case that can really help people and change lives. And the more people that rally around that, sure, it might not be a DeFi instrument, but the merchants are pretty damn sure they're going to get their dollar back. They're confident. They don't have to worry about some black swan event. And it's fast, it's feeless, and it adds in, they can have interest without any counterparty risk, without having to lock it in a smart contract. It's all on a layer one data availability layer. So I think when you start to see that, more and more merchants are going to accept it, then you can start to build layer two DeFi applications on top of something like that. But obviously that's from HBD's perspective. There's anything else anyone wants to talk about? Yeah, go ahead, Walters.
I was just going to say the other side of it is also the governance model. I think we have a lot of romanticism in this space with DAOs, and there's plenty of places where they're very applicable. And in the governance of stablecoins, which is essentially like monetary policy, is not one of them, in my opinion. So not only do you have to get the collateral and the issuance mechanism figured out, but there needs to be as limited governance as absolutely possible in these things. This is what allowed MakerDAO and DAI to get out of hand and turn into the abomination it is now. It started off as a solid project, and I would highly suggest anyone who's just interested in the story there to do a little research on their founder and how all that's gone and how he likes to swim with his clothes on. So, but besides that, the governance model is really important.
Yeah, I can agree on the. Well, go ahead, Matt.
Well, no, just saying, it's a red flag if someone's swimming with their clothes on.
Yeah, exactly. I think there's also, when I hear DAO, I think there's the version that a lot of people think of where, you have something like MakerDAO where they can say, hey, we're going to go USDC, we're going to go invest in physical assets. Usually these things are backed by pre-mines. There's something like on a layer two. But everything has some form of governance. Even if you have a stable coin, Ethereum has governance. So if your stable coin is built on Ethereum, you're having to rely on the governance of Ethereum, which is coin voting at the moment. So I mean, no matter what, you have that. I would say I would not want a layer two stable coin. I would want something built on the layer one. Maybe have some community control over the inflation, the APR that you get, the interest. But as far as starting to back things, I think you would have to accumulate the HBD and then as a group do something on a layer two, but that's not something I would really see as sustainable. But yeah, I wouldn't want some kind of layer two DAO controlling the stable coin at a whim. I completely agree with that.